Let's keep the spotlight then on the mega listing of today, Utkarsh Small Finance Bank. It was a solid 60% premium. Govind Singh is the MD and CEO, and we've got Sarju Simaria, who's the CFO of the company, now joining in to discuss the road ahead. Thanks so much for taking time out. Now, Govind, I want to begin with you. Tell us about your loan book, because there's a large exposure to microfinance. Even though you do have diversified risks, what's the plan to grow your loan mix?
So, that microfinance is our first thing what we have started 14 years back, and that is what we understand the best. But after becoming a bank, we had got multiple new verticals like MSME, affordable housing, wheels, SME, and we are seeing a growth of all these verticals during last few years time. You are seeing that 4, 5, 6% growth of the non-microfinance verticals during last few years. Our assessment is that this trajectory, this trend will continue going forward also. Giving an exact number will be difficult, but this trajectory, I think, will continue.
Right. Govind, your regional constitution is around 60% coming just from Uttar Pradesh as well as Bihar. And in the past, your profitability has been hit because of floods in the region as well. Given the current situation in the north, could this impact your JLG and part of your business?
Generally, flood, may have some impact in the initial phase, maybe for a month or so. But normally, we have seen in 45 to 60 days time, the things become normal. So this is, this we have seen for almost now 14 years. And as far as concentration is concerned, I think this is the geography which we understand the most, the best what we understand. And I'll use the word that we are a native for that area, and we see a lot of requirement there, which becomes opportunity for us. So we see that there won't be much impact. At the same time, there is a big opportunity that geography.
Okay, and Govind, the asset quality as well has dropped from 6.1% to 3.2%, and that was primarily led by COVID. Have you seen an improvement in your collections now?
So largely it is it's coming back from COVID. So we had challenges because of COVID, and that was true for the other industry players also. And we have seen, especially if you look at the second half of last financial year, it's almost near normal, or pre-COVID period. So the asset quality has come back, and the collections have improved. Overall businesses have improved. So that is reflecting that. In historically also, our asset quality used to be very good. It was only because of COVID impact, and which has gone away now. And I think the way things are happening, again, here the trend or trajectory will continue.
Sure. Govind, asset quality in the MFI space has faced some headwinds, right, in the last 2 years. How do you look at asset quality going forward? And does your model help control slippages better?
So two important aspects. One is that, microfinance is around 2/3 of our book right now. So slowly the share of microfinance is coming down. But having said so, one is microfinance. We have also seen the challenges during COVID period. The entire industry faced that. But if you see, the entire industry has come out of it, and things are much normal today. When we are talking of the overall loan book, and normally this trend looks like it will continue. We don't foresee a challenge going forward. It has actually come back very fast, and that trend will continue.
Okay, and what's the outlook when it comes to your deposits? Because banks are inclined towards low-cost deposit rates, and larger competitors can price it better. So how does a small finance bank such as yours deal with this competition?
So again, in the last 6 years, we have built a strong deposit franchise, and across the country, we are in 26 states and UTs, and almost top 100 centers we are trying to cover for deposits. And this trend again we have seen has helped us in garnering deposits, especially the retail and CASA part. It is building, though it may be the growth or build up may be slow, but it's steady, and we expect that our requirements of deposit will be met. Our cost of fund through deposits have come down significantly during last 5-6 years time, barring last financial year when overall industry had a challenge. Rate of interest hardened last second half of the financial year, and that's why CASA took little hit. People moved more money from CASA to retail term deposits. Again, that was you can say industry phenomena. But overall, our deposit trajectory has been good. Last year, we grew by 36% in terms of deposits, and with so many branches opened during last 3 years time, which will mature over a period of time, our sense is our deposit growth will be again sustainable and steady going forward also, and we are seeing a better build up of CASA and RTD, which again will continue.
And how will growth shape up for you? Are you confident of that 25 to 30% growth over the next 3 to 5 years?
So as I mentioned, we have spent a lot of money. We have invested a lot on creating new verticals across, opening new branches, and our employee base has also gone beyond 15,000. So and this we have done during last few years time. My sense is our all these verticals, all these new branches will mature, and growth should be growth should come from all the new branches those who have opened during last 3-4 years time. Similarly, the verticals which we have created during last 6 years time, those are still small in terms of overall AUM. So the lot of growth potential is still there. So we don't foresee any challenge in continuing the growth phase what we have seen during last 3-4 years time. Also, we have spent a lot of money. We have invested a lot on the technology part, which will again help us in you can say fastering the growth pace from here.
Just to supplement Govindji, our focus on rural and semi-urban sector, our geography that we are into, our understanding of that geography, our ability to have low-cost fund operating, given the fact that we are now IPO and upgrade rating has recently happened to us, also our strong balance sheet, all will accumulate into a fact that our FY23 performance that we have done, I think that trajectory we should be consistent upon. In fact, we believe in more consistency. I think we should be being consistent in our results.
All right, congratulations on a stellar listing, and thanks so much, gentlemen, for joining in with an outlook on your business plans. On that note,